Hello once again, folks. This is Steve Memory from Iconic Wealth Management with an educational economic update for June 2018. In this month's video, I'll discuss some of the major headlines that influence markets in May, and I'll also provide insight into what these developments could mean for you as an investor. So please stay tuned to the end of this video for a required disclosure statement. Geopolitical headlines continued to affect markets in May, as investors tracked a number of scenarios. For example, the back and forth over the scheduling of the historic U.S.-North Korea summit affected stock performance, as investors tried to determine whether it would actually happen. Once the meeting did take place, the market greeted the results with a resounding meh. Investors also watched as trade tension between the U.S. and China amplified, with each country threatening tariffs on the other. The tension then calmed as the countries released a joint statement saying that they would work to substantially reduce the United States trade deficit in goods with China. We'll see. The month ended with more trade-related tensions. On May 31st, the Trump administration announced that at midnight, U.S. tariffs would start on aluminum and steel from Mexico, Canada, and the European Union. In reaction, the Dow dropped more than 250 points that day. No surprise. Despite the backdrop of political fluctuations, all three major U.S. indexes ended the month in positive territory. The S&P 500 gained 2.2%, the Dow added 1.1%, and the Nasdaq leapt forward with a 5.3% gain. As the month came to a close, we received a number of reports that indicated the economy continues to grow. In particular, the latest data shows that consumer spending jumped more in April than analysts had expected. Inflation also hit the Federal Reserve's target level for the second month in a row. Now, having examined together, these two details led economists to increase their forecast for the economy's growth in the second quarter. Now, speaking of economic growth, we received data for the first quarter gross domestic product, GDP, which increased slightly less. That's an interesting way to put it, right? Increased slightly less than originally estimated. This change came largely from decreased business inventories. So, rather than being a negative, this data creates greater opportunity for increased production in future quarters. In fact, some estimates indicate that the second quarter GDP growth could be 4% or higher. In other words, if you look beyond the headlines, you'll find data indicating that the economy continues to strengthen. Global events are affecting markets, but our economy keeps expanding during any tensions. During June and beyond, we will continue to analyze the data that we see and what may lie ahead. Not the least of which, of course, is the most recent Fed interest rate increase. But that's it for this month's Educational Economic Update. Once again, this is Steve Memory with Iconic Wealth Management, signing off for the month of June 2018. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 703-891-9518. We're happy to talk to you.